Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
Let's now go to Washington for the latest from the Capitol, where a key House committee on Friday failed to advance House Republicans' massive tax and spending bill. This after hardline conservatives bucked President Trump and blocked the bill over cost concerns. We got Joe Mathieu with us. He's co-host of Bloomberg Balance of Power. He joins us from our Washington, D.C. bureau. Joe, Representatives Chip Roy, Ralph Norman, Josh Brecheen, Andrew Clyde joined Democrats to vote against this. What happens now?
Yeah. Well, that's a great question, and that's the one we're all asking. This happened right around noontime. Tim, it's great to be with you today. And, you know, you're going to hear a lot of people speculate about the fate of this bill based on this failure. And I won't try to do that right now. What I will tell you is this is not the way it's supposed to be done. This is the easy part. Getting through committee is like the layup, the rubber stamp, and it's incredibly rare to see something fail on this level. The fact that the chairman, Jody Arrington, even brought this to a vote, clearly knowing that he didn't have the numbers, is remarkable. You mentioned Chip Roy, Ralph Norman. These are frequent critics of legislation on Capitol Hill that doesn't cut spending enough, and they know what it's like to get a phone call from Donald Trump. So a couple things can happen here. Yeah. And you know what? Yeah, he's on the plane right now, by the way. I don't know if he's taking a nap, Tim, or if he's actually on the phone with them, but this could be a pretty dicey weekend for these guys as they try to put the pieces back together.
Well, that's exactly where I wanted to go, Joe, because we saw what happened in the last several months when Republican members of Congress have not gotten on board. All it takes is maybe a phone call or two from the president, perhaps even maybe from some of his allies or from Speaker Johnson. What's the president's next move here? What political capital does he have to push these guys to get on board?
Well, it's a great question. He was on Truth Social earlier today saying, stop talking and get it done. He was referring to the grandstanders, as he likes to call them, the names that we've already used here. The vote was 21-16, so you've got more than a couple Republicans to convince here, but there's a lot of moving parts when you're trying to find balance in something like this. And the whole matter of SALT that we talk about a lot here on Bloomberg is right in the middle of it. If you're going to make the New York Republicans happy and raise the cap on SALT, you're going to upset other people who want to see steeper cuts to make up for that. And that's the balancing act that Speaker Johnson is in right now. He clearly hasn't found the balance. But just to give you a sense of what this means, we had the Budget Committee today. It was supposed to go to the Rules Committee on Monday, which is kind of the gatekeeper to the floor. And then, as the Speaker promised, a vote on the floor by Memorial Day. They're not going to fool around with that Memorial Day break. Everyone's going home one way or the other. So this whole timeline could suddenly be off the rails. When you consider what's coming in terms of the debt limit and so forth, it could be a complicated summer, one that was already complicated. It could be even more so.
Okay, so everyone's not going to be there voting on this on Memorial Day, Joe. So what do we know about just exactly what happens next with the timeline here?
Well, they'll probably get a couple of boos when they're in the Memorial Day parade if people are actually paying attention at home. But we have to remind ourselves, this is the signature piece of legislation for the Trump administration. This is what he calls one big beautiful bill. This is to extend or make permanent the Trump tax cuts. Think about the promises on the trail. No taxes on tips, no taxes on overtime. We already went through SALT. They kind of have to get this done. And when we find out in a couple of weeks what the real X date is on the debt ceiling, that's going to be maybe the gas on the fire that gets people together. The fact of the matter is, though, I'll make this even more difficult. Once all this is potentially done in the House, it goes to the Senate, and they're going to rewrite the whole thing. They're going to make all kinds of changes and probably turn back some of the cuts that were made to Medicaid to pay for some of this stuff. And all these same guys in the House who didn't like this bill today will like it even less then. And then where are we?
Well, Joe, while you're talking to us, Kaylee's sending us tweets. This one coming from NBC News reporting that the House Budget Committee Republicans are going to try to reconvene on Sunday at 10 p.m.
Oh, that'll go well.
So what happens between now and then?
They don't have bedtimes.
they had a couple of overnight committee hearings already this week, like 16 hours long. They had lawmakers falling asleep at 4 a.m. They're good at this. It's high drama. They'll bring in the takeout and the wine and maybe the cots, and it'll make for great TV on Monday morning. Whether they can actually get anything done, though, we saw them bring it to a vote today without being able to answer that. So what changes in the next couple of days, aside from some arm twisting from President Trump? I don't know.
Hey, Joe, before we let you go, we got about a minute left. We wanted to talk to you also about takeaways from President Trump's overseas trip. 4 days in the Middle East, the tour that really focused on making deals. How would you just describe for us the view of this region by this administration and how it differs from previous administrations?
We talked to former Congressman Denver Riggleman about that today. He joined us live on Balance of Power from Dubai. He's actually founded an AI company of his own, and he's in the mix over there. And he was talking about this incredibly important moment as this region is opened up to the likes of NVIDIA, AMD on the friendly list, if you will, when it comes to high-tech chip exports. This is an incredible moment of opportunity, I think, not only for the administration, but for the industry here as we look for options to turn away from China. Pretty incredible, the dollar figures that we saw announced on this trip, and it's also a whole new look optically at what a presidential trip can look like here, leading with the dollar signs and kind of backstopping with the politics. I'll say one thing, though. Nobody got to Turkey today named Trump or Putin for Ukraine peace talks. That was something we were holding out for, and it's not going to happen this time. That will remain on a lower level. Okay. Well, thanks for the update, Joe, from Washington. Really appreciate it. I want you to get some rest this weekend because I know you're going to be busy following all the happenings in Washington, D.C. Also, don't miss Joe and Kaylee for the late edition of Balance of Power.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, President Trump said on Thursday that India has made an offer to drop tariffs on U.S. goods as the nation negotiates a deal to avert higher import taxes. We know our next guest is watching this closely. He's featured in the upcoming weekly CFO Briefing newsletter. It's written by Nina Tretman. She's Bloomberg News senior editor. You can also sign up for it at bloomberg.com/CFO-briefing. Nina joins us now along with Kabir Ahmed Shakir, CFO of Tata Communications. Nina, I want to start with you. Why did you choose to feature Kabir in the upcoming CFO Briefing newsletter?
Well, it seems as it's good timing, right? India is in the news. We've also seen a fair amount of tensions recently between India and Pakistan. So we're also talked about risks to Kabir. So yeah, it seemed to be a good time. Kabir, thank you very much for staying up so late. It's, I think, around midnight in Mumbai. So thank you very much for joining us. We've just heard from Tim on the outlook for India. Just wondering what that means for your business as you're growing your business at Tata.
Thanks, Nina and Tim, for having me on the show. Yeah, I know it's almost going to be midnight here, but quite excited to be on the show. As we spoke, earlier as well, I'm cautiously optimistic about what the year will unfold for us. We are working tirelessly on our strategy and executing on our strategy. And of course, business is not ever going to be static. The environment is going to keep throwing challenges at us. But I guess we have a resilient business. We are in the B2B space, and we are here to serve our customers. And our products and services help our customers both on the revenue side and the cost side outcome. So managing volatility, helping them grow, helping them manage their bottom line and their risk is what we do day in and day out. So I'm excited to continue to partner and help our customers.
I'm curious about how tariffs specifically affect you. Even though you're based in India, you are a global company. You essentially connect 80% of mobile customers worldwide. You serve 300 of the Fortune 500 companies in some way. But tariffs affect products, hardware, infrastructure, technology. How would tariffs affect your business? How do they affect your business?
Well, there are two ways in which it could affect our business. One is directly, because we are in the telecom space and we do procure hardware equipment, which we deliver as part of the overall service to our customers. So it does impact there, but that impact is very negligible and insignificant. So I'm literally not worried about the direct impact. What worries me is even so much so not the tariffs, but the the volatility, the uncertainty leading up to it. So from the time President Trump announced, and then there was a pause, and now there is a bit of a withdrawal. So we don't know when this turbidity is going to stop and when there's going to be more clarity. So when we see this uncertainty with our customers, the delay in decision making is something that is likely to push revenue out. Although as of now, I have not seen this in our order book as yet. And that's the reason why I use the word cautiously optimistic, right? That we would like to be cautious to see what's that conversation that's happening in our customer boardrooms and how we can, help them.
Maybe I can jump in here, Kabir. Just thinking about the relationships between India and the US, I'm wondering how you're seeing additional growth opportunities for your business. I know you've told me the US is an important part for your business. You've done 2 transactions here recently. Just talk to us a little bit about how you're seeing that develop.
Yeah, US is a very, very important market for us, and we want to grow US to $1 billion of our business. We are currently about a little under $2.5 billion, dollars for now, and US kind of totals up to around 750. So we would like to take it to $1 billion in the very near future. So we've invested both in terms of product capabilities for the business, go-to-market capabilities, feet on street, and everything that we can do to grow the business. So therefore, our strategy is still steadfast. And we will look for both organic and inorganic opportunities to grow our footprint in the US. So we are committed to that.
Kabir, what is the M&A outlook like? Because at least in the US, we had a pretty big media deal announced today with Charter and Cox. Are you looking at any potential M&A activity?
We are continuously scanning, if I may, and there are targets that we'll look at. If you look at our business, our data business has 2 chunky parts. There's a core connectivity part of the business, our traditional telecom point-to-point connectivity, and Ethernet, and international lease lines, and the entire submarine cable that we have. So that's roughly about half of our business, and the other half is the digital portfolio, which we call the overlay services, where we use the connectivity as a foot in the door and then provide value-added services to our customers, whether it's the customer interaction, suite offerings that we have, whether it's IoT, Move, cloud, security, and all of those offerings that we do. It is in that space that we would be really looking for any potential targets that could either, I would say, bolt on and fill any portfolio gaps I may have in my product offering, or even help us with the go-to-market, offering. I'll give you a recent example. When we bought Switch, and it was primarily a US-based business. Switch gave us 2 capabilities. One, it gave us the media transmission business in the US, and that was very, very, important for us. Plus, it also gave us the media production, capability, so we could backward integrate and offer more, more product offerings to our customers, and we could take that globally as well. So it made a lot of sense for us to get a footprint in the US geography, and then use that capability to even go global. So assets like that will be of interest for us, and we continuously scan for them.
Yeah. Kabir, just wondering, based on the fact that you're based in India, we've seen some geopolitical tensions there recently, not the only place in the world where we're seeing that flare up recently. Just wondering, from a CFO perspective, how do you navigate these kind of geopolitical risks, and how far has risk management become more important to us, to you, and also sort of how does that work?
Nina, I would say we have a very, very robust risk management framework. And today it is geopolitical risk. Yesterday it was something called COVID pandemic. And not more than a decade ago, it was a Lehman collapse and the crude oil crisis. So we've seen, and every time when this event happens, we call it a one-off event, a black swan event. But I guess all organizations, sail through this. They have a resilient P&L and balance sheet and resilient culture that helps them navigate through this. And we are no different. And we are a global organization, so therefore we are not insulated to only domestic, issues. Every morning we wake up with something happening, across the world. The geopolitical, conflict, as when we spoke, I mentioned, it never has ever it happened that we had 3 cable systems go down at the same point in time in the last 20-year history ever, which happened about 9 months ago. And that's because of the Red Sea conflict that you actually see. So we have woken up to the reality that despite these pressures, we need to continue to be, serving our customers, providing them, diverse paths, giving them alternatives, so that their business, keeps running. That's the reason why they come to us in the first place. So when we chalk out plans, we of course look at the likelihood and the impact of any of these events occurring, and depending on the severity, either we are acting on them right now, having a plan A, plan B, plan C ready, or if not, keep watching that space if it develops in any way disadvantaging us, and have mitigation plans.
We're speaking with Kabir Ahmed Shakir, CEO of Tata Communications. Kabir, you have this perch as CFO of the company that operates, or has business, I should say, in close to 200 countries around the world. So you understand where there's weakness, where there's strength. What are you hearing from customers right now? This isn't exactly discretionary spending that they do when it comes to IT, when it comes to telecom. But are there areas of the world where you're seeing strength? Are there areas of the world where you're seeing weakness right now?
Look, when we look at any of these things impacting, like the tariffs, of course, there's a prediction on, especially in the US, the very recent Goldman Sachs report of last month suggests that spend levels are going to be pretty static compared to last year. So, and the probability of capex coming down is as high as 45%. So you see all those, statistics coming in, and I can understand why, because of the uncertainty. And if customers need to rewire their supply chains, then they would rather preserve the cash for that than, spending on important but non-urgent, IT spends. So that's one dilemma. The other conundrum that they actually have is clearly there is a FOMO. I mean, with the buzzword of AI going through, every organization is also looking at, are we investing in AI? And are we future-proofing our business? So therefore, not investing and not spending on that space is not an option either. So that's the kind of conundrum that the customers are in. And we are helping our customers to look through this, bring clarity as soon as possible, so that they do not, suffer the consequences of an indecision on and not spending in time. So it's a tricky situation. So I'm not saying it's easy, but you see that consistently across industries. Quite often with network, it so happens, Tim, is if it ain't broken, why fix it? That's the kind of attitude people have. So it's very normal to try and push back that spend, but as I said, with AI coming in, it's very difficult for them to push back for too long.
Yeah, certainly a theme that we saw when it came to the most recent round of earnings reports from companies here in the U.S. that AI spend is continuing. Kabir Ahmed Shakir, thanks so much for joining us, CFO of Tata Communications. Also, a big thank you to Nina Trentman, senior editor at Bloomberg News. Check out the CFO briefing by Nina Trentman. You can sign up at bloomberg.com/newsletters or go directly there, bloomberg.com/CFO.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
And we got a special guest for our drive to the close today. That's Craig Moffett. He's founding partner and senior analyst at MoffettNathanson. He joins us from Craig. A deal such as this in the year 2025, could it face regulatory scrutiny?
Hey, Tim, good to be here. You wouldn't think so. Cox and Charter are adjacent. They don't directly compete with each other. Charter's pricing strategies and their go-to-market strategy is pro-competitive and pro-consumer. So you wouldn't think that this deal would face any challenges, even at the state level, because they'll also have to get approvals from the public service commissions and public utility commissions in the individual states involved. You wouldn't think it would see any challenges. But again, things have been sort of unpredictable when you get DEI considerations and things like that can hang up otherwise big deals that are ready for approval. You do have to be at least somewhat circumspect about what kind of process it'll face.
Okay, that's a deep tease for the Verizon Frontier conversation we're going to have in a few minutes, but we want to stick on Charter and Cox right now because that is the big deal of the day.
Right, and Craig, so you joined the show in January. I think Carol Masser was here. It wasn't me. I'm filling in for her. But your top pick for 2025 was Charter Communications. So I'm wondering, how has your view changed on the company in light of today's deal news?
Well, nice to see you, Emily. I think it's actually not changed at all. And in fact, I suspect that the reason that Cox was finally willing to agree to a merger after 20 years of being asked, or really, I guess, almost 20 years of being asked, they went private back in 2008, if I recall, is that the Charter momentum, and in particular, the Charter momentum in wireless and the converged offering of wireless and broadband together was so compelling that I think Cox probably said, we're better off to be part of the Charter family after saying no to mergers for 20 years. Maybe it's finally time.
Is it time because of what has happened in this industry over the last 20 years? The rise of streaming, the cord cutting that we're seeing, the secular decline of what's known as the cable bundle, and just the disruption that we've seen. I mean, in your career has been pretty remarkable.
It has, but I don't think that's really behind it. It's easy to probably the younger listeners don't remember when cable was about video. Cable's core product hasn't really been video for 15 years. Cable's core product has been broadband for at least 15 years. And so it's really all about broadband. What's changed is that we're now seeing broadband and mobile service being offered together in this kind of what is typically called within the industry convergence, but which they're trying to sell to customers as just sort of connectivity everywhere. The CEO of Charter was speaking at the Moffett-Nathanson conference for us yesterday and was saying that that he thinks when a customer pulls out of their driveway, they don't really care who's providing the service in the driveway, who's providing the service in the house, and who's providing the service outside of the house. They just want to make sure it works in all those places. And so what they're trying to do is convince customers that we can give you a better deal at a much lower price and give you the best connectivity everywhere. And it's working for Charter. And that's, I think, why the stock is up almost 60% year to date. It's been, or over the past 12 months, I think it's just, people are starting to see the fruits of that strategy. And I think that's, again, precisely what Cox saw. And Cox has an agreement with Verizon for carrying wireless traffic that they are not able to put over Wi-Fi or over their own network, the same as Charter does, but it's not as good a deal. And so I think a lot of this was driven by, we want to be on the Charter deal that has better economics and better terms than the deal that we have with Verizon.
Is this going to keep working for Charter Communications, given the competition that they're seeing from the wireless companies that are now doing broadband into homes? I mean, I have Verizon or Charter offered where I live, and I can get Fios for $40 a month for a really fast connection, because it competes with Charter right there.
Yeah, you're exactly right, Tim. That's why you've seen pressure on the broadband subscriber numbers from Charter and Comcast and the rest of the cable industry. The answer to that the cable operators have been pushing is, well, a broadband competitor may be able to save you $20 a month on your broadband subscription, but we can save you $75 a month on your wireless subscription if you take it all together, and you will end up being much better off financially and have a better product. And that's a wireless service that actually, while the cellular portion runs over the Verizon network, it actually beats Verizon in network testing results, because the time that it's not on the Verizon network is actually running faster than the Verizon network does. And so it is by far the best, the lowest price deal available to customers. And that's what the cable operators are leaning into.
So what's the plan here for infrastructure and building out just more infrastructure for internet in the home? Are the combined companies now, Charter and Cox, going to be building out more fiber? That's kind of the infrastructure that delivers the fastest connection here, right?
Well, there's a narrative that fiber to the home, or what in the industry is called FTTH, is better than cable infrastructure. It's not really. They are largely the same. In fact, overseas, there have been all these cases that have demonstrated that cable actually has more fiber than fiber to the home does. That is, a packet is delivered over cable spends more time on fiber than it does even on a fiber to the home network. So the networks are largely interchangeable today. There simply isn't really an advantage to having something that's called fiber over something that's called a cable network. So it really comes down to price, and the most differentiated part of the offer is actually in the mobility side.
Hey, Craig, before we let you go, promise we'd do 30 seconds at least on Verizon winning FCC approval for its $9.6 billion acquisition of Frontier Communications Parent, Inc. Why, in your view, did this deal go through?
Well, I think it's pretty clear. It went through because they agreed to end all their DEI programs at Verizon, and the deal was approved minutes after that. And that had been the hangup that the FCC had with the deal. But it's also, that deal is interesting because why is Verizon buying Frontier? They're buying Frontier because they want a bigger wireline footprint. Remember, they already have a national.
Unfortunately, got to leave it there. Craig Moffett over at MoffettNathanson.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
All right, well, we are watching all the economic data that we are getting very closely, including real estate data. Housing starts increased in April as a pickup in multifamily home construction more than offset a decline in single-family dwellings caused by elevated inventory. Back with us is Katie Hubard. She's Executive Vice President of Capital Markets at Walton Global. It's the privately owned asset and real estate investment company. It's got about $4.4 billion and nearly 81,000 acres of land under management in the U.S. Katie, always good to have you on the program. If you think about where we are right now versus where we are when we last spoke to you back in March, what is the biggest shift that's taken place from your perch?
Yeah, Tim, thanks so much for having me. I would say the biggest shift is just weak spring selling season. Typically, 37% of all sales by public home builders are made in February through May, and they just have not had the traffic. And it's really because of elevated borrowing costs that we're seeing. Mortgage rates are still high, and then the uncertainty in the economy is keeping people from shopping.
Katie, I want to get your take on the economic data that we got out today, housing starts. Because I'm looking at it, we have multifamily home construction, like apartment buildings, jumped, but then single family home construction decreased. What do you make of this divergence? What is that telling us about the overall housing economy right now?
Yes, I mean, the public home builders are really doing what they can to protect their balance sheet, so they're not wanting to overbuild with the weak spring season. So they've really pulled back on their housing starts. Typically, they're going to be starting about 3 homes per community across the nation, and you're at less than 2.7 homes per community. So they're just building less because they don't want to be stuck with inventory that they can't sell. Because when they have inventory sitting there, they're having to slash prices to keep the units going. And then there just continues to be a pent-up demand in the rental market because of the lack of affordability in the single-family market. It's keeping the developers hungry to build and on the multifamily.
Katie, let's go big picture and talk about a theme that has emerged over the last few years and especially emerged during this last presidential election cycle, and that has to do with housing affordability, housing availability. You touched on it when you talked about rental and home prices as well. Are these homes going to get built in places where homes don't traditionally get built? I mean, that was one of the ideas that was presented during the campaign by Vice President and then candidate J.D. Vance, was building on federal lands. In your view, is that how the U.S. is going to tackle this housing problem?
That is a great question. So we're just coming off of the ULI conference where they're talking a lot about affordability and how we're going to be able to build homes that not only are affordable, but also attainable for people that aren't looking for, affordable homes with government assistance. Really what's happening is developers are moving out into further out into the suburbs where they can build and the land is more affordable. The challenge then, of course, then you don't have the utilities availability. So you don't have water, sewer to be able to build big master plan communities. Herein lies the problem with the government. Yes, does own 500 million acres of land that they could just say, hey, you can build on this, but then you have to have public-private partnerships, and it has to be a win-win where everybody along the value chain can make money. And then if you look at the land that the government owns, it's the wrong land in the wrong location without the availability to actually build on it. Physically, you can't build. And then the people who would be potentially living in places where the government owns land, we're talking, the desert, the mountains, there's no jobs there. So it sounds good, but it's just not a viable option.
Yeah, I heard there are 3 things that are important when it comes to real estate: location, location, location. I've heard that before. Right. So then is the answer in upzoning or rezoning? Is the answer in changing local laws in municipalities to allow more dense homes and perhaps getting rid of parking requirements and really concentrating on areas where the economic activity is and making sure that people can find available housing in these areas? Is that the key?
That really is. We need deregulation to make permitting easier, to make the densities better for developers so that they can make their numbers pencil. The challenge is just in those urban core areas that we're talking about, there's not a lot of availability of land. And I'm sure if somebody came, wanted to build an affordable multifamily development on a park in your neighborhood, you wouldn't want that. So you've got, the not my backyard mentality at ULI. They were talking about now they've got a YIGBY, yes, in God's backyard, where they're actually looking at taking religious institutions that maybe are abandoned or not being utilized and putting affordable housing in there. So there's a lot of, discussion about ways to make it work. And one of the ways is through just engineering, being able to build homes at a faster pace through engineering. So that is coming, I would say. If you've looked at Boxable, that's, where you can unfold a house in 3 days, doing that on a larger scale with bigger buildings.
I'm wondering how tariffs and the trade war impact that, what you're talking about specifically, like the speed at which home builders can actually build and source raw materials. What are you seeing right now about how tariffs are impacting the housing supply chain?
Yeah, so today it's actually better than we thought. The pause on the tariffs has helped. Right now, you're looking at about 2 to 4% that has actually impacted the building costs today, and home builders just are not passing that on to the end users. They were anticipating a 6.8% increase in materials this year, but it's actually been less than expected.
What's the biggest issue? Is it lumber from Canada? Is it gypsum from Mexico? What is it?
It's all of the above. It's, you've got steel, you've got appliances coming from China is a big one. The houses that they're building today, they have purchased materials in the past. So it's really looking forward. And that's another reason why they've slowed down their starts, is because they don't really know what the prices of those goods are going to be for those future homes. And we really need that to stabilize across the board. But yeah, it's all of the things that you mentioned, Tim.
Katie, what have you heard? And, we talked about this a few months ago, but I want to get an update from you on this. What have you heard recently from the home builders about labor, especially with regard to the immigration crackdown that we've seen in the U.S.? Are home builders finding enough people to work for them? And then are their subcontractors finding those folks too?
Yeah, what's interesting is that they're not really reporting a shortage in labor. They're actually having some of their trades contact them and asking for more work just because there has been a slowdown in construction across the board. So that has not really affected them that much yet. Where you're going to see that affect the market the most is in the 50 unit and below multifamily market, because the people that are now not immigrating to the US or have left are typically the renters that are renting those smaller multifamily houses.
Before we let you go, we have just about a minute left, but I have to ask about mortgage rates because Trump has been pressuring the Federal Reserve to cut rates faster. Does the housing market need an acceleration in the path of cutting rates? How much do we have to see rates come down?
I mean, definitely the sweet spot is sub 6%. There's so many people that are on the sidelines, waiting and hoping, hearing that rates are coming down. Even when the Fed does cut rates, though, that doesn't typically affect the 30-year fixed. It's really tied to the 10-year Treasury, and that is really tied to inflation. So sticky inflation is keeping the 10-year high. At 6.78 is the 30-year fixed today. We really need the 10-year to get down to about 3.78 for the rates to hit below 6. So we don't see that happening this year or next year. But that would definitely help the market.
Katie, always good to check in with you. Appreciate you taking the time and joining us on this Friday afternoon. Katie Hubard, she's Executive Vice President of Capital Markets over at Walton Global. A reminder, they've got about $4.4 billion and 81,000 acres in land throughout the U.S. under management.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.